All right. Good morning, folks. Tim Davis coming to you guys with another quick video. And this one's going to be not a market review, but I wanted to give a brief overview of a little small snippet of my trading strategy because I'm not a day trader. I'm always on the go, so I don't day trade. I I'm always looking for trends. I'm looking for developing trends, longer term trends that I can possibly get into that sector in some way, some fashion to take advantage of the longer term move that could be in the process of setting up. So I'm looking for a longer term trend that I can possibly put on a position, maybe even buy stock in that particular security, or maybe buy a longer term out of the money call option or call spread or put spread, whichever direction I'm trading. So I want to start off by taking a look at a particular sector. Okay, I may be looking at S&P, the Dow Jones, whatever. I'm looking at a sector or the overall market and looking at specific trend setups. And I like to find uh, indices or sectors that are showing a possibility of a trend, overall trend breakout. And then I like to look within that sector or within the indice and find something that kind of mirrors or I'm following in the same direction. So I want to look at gold, take a look at gold, because gold and silver I've been watching for many years, at least past 10, 15 years, and been watching the overall setup in gold and silver. And it looks like to me that gold and silver may be in a process of a long-term breakout. So I'm gonna use that as an example. And then I'm gonna take a look at some specific stocks, or at least one specific stock that I just recently got into, trying to track the overall movement of gold. So let's start off by taking a look at gold. And I like to take a look at the longer term, longer term time frame. So I'll take a look at the quarterlies, the monthlies, and the weeklies, and just to depict whether or not we're in the trading range, a longer term trading range, or we're in the process of a possible breakout. And if I can almost spot a possible breakout, then I may take a longer term position, from maybe from quarter to quarter, or from beginning of a year to the following next year. I may take a leap position. It all depends on how strong my thought process is, or even how strong my conviction is as far as the trend that we're in. And I do have a strong conviction right now on gold and silver, and because of the way it's been trading for the past several years now. So I want to highlight a couple things first. We'll look in the past first, and then we'll look at the here and now. So looking at gold in the past, here's a trend. Here's a chart of gold dating all the way back to 2001. So let's go back to 2002. So from 2002 or 2003, that just draw this line pretty much just to show you the time frame that when gold started to show some type of steady trend higher. So from 2003, a little dip in 2008, 2009, but right back on track, all the way up to a high, right about there. So that, to me, that's a steady, longer term trend. Overall, the overall trend is high. You have some pullbacks here and there, but on this quarterly chart, it showed that the overall trend of gold was higher. So we were from the bottom left to the upper right. And then it peaked out. It shot up, and normally you on these long-term charts you'll see big time overbought area where we make a dramatic move higher, and then normally we start to see some, you know, you'll start to spot these in the daily charts. You'll start to see some major reversals or trend changes. So this was pretty much a trend change up here, and that was back in 2011. Then since then, gold has pretty much started a pullback from 2011. Let me get rid of some of this. So if you'd have had a move in some type of gold position from 2002, and you could have been in and out of these positions, but from 2002 all the way up until 2011 was a good time to be able to make money in gold consistently. Okay. Then we started to pull back, and pretty much it was in a downtrend. So you could have made money on the way down, or you could have just waited. And if you was a, long-term bull in gold, you could have waited until you start to see gold start to settle somewhere and find some support. And that's what I pretty much noticed, and I pretty much been following, looking for gold to find some support. So here's my 50-day moving average on a quarterly chart, and as you can see, from 2011 all the way down to 2000 and about 2016, you see gold found some kind of support right at its 50-day moving average. So did not break below the 50-day moving average, started using it as a level of support. So bounced around along the bottom, and right around 2018, it got a nice boost off of that 50-day moving average. So that was a good time to consider position. And where to? Right back up to an area of resistance, and that you could have pretty much almost picked that out, that could have been an area that gold would probably have some type of struggle consolidation, because you pretty much draw if I was to draw a trend line from this big spike you would have been able to see that area, as soon as you got up to around this level here, that was an area for you to start to pay attention to some possible concern. And that was around 1950, about 1950. So 1950 or so, once gold got back up to that level, you can almost could have bet, because it was along a longer term aspect, looking at a quarterly chart, you could almost bet that we got around that area, you start looking for some type of consolidation or pullback, which is what happened. We broke above that level just a little bit, almost up to 2100, and then what happened to pull right back, because that was an area that we had a big spike to, which is a previous level of resistance. So previous level of resistance, it's going to come support. So right around July of 2020, spiked up above that 1950. People got excited, but what happened? We got up to that almost 2073, and then gave pullback, gave some of that back. So that led me to believe that gold was not in a dire situation where it was going to falter and give all of this back, but it started a trading range. Once we hit that high that we saw back in 2010, we started a trading range, and that trading range was right pretty much here. See, that was a trading range that we pretty much were back and forth. I'm saying that we developed a new level of support right here, right around here, around 1600, 1617. So between 1600 to this high up here, to 19 to 1600 to almost 2073, we was in that range for multiple years. So up and down in this range, multiple years. Then all of a sudden, gold found a way to break above this 10-day moving average, and it started using that as a new level of support, as you can see here. So found a new level of support. Got up to that 2073 level again, right around here, around beginning of 2023, pull back where to the 10-day moving average. And then it looks like it established a new level of support and started to trend higher. And what I spotted after a couple quarters is that not only did it start to trend higher again, but it gave us confirmation that this move could be possibly sustainable, because found a new level of support right at this this temporary moving average, and we got a bounce on that quarter. Next quarter, which is the quarter that we pretty much in now, it's confirmation. We rose above this struggle level of 2091 that we reached back in July of 2020. Rose above that level, and we're holding that level right now as we speak. All right, so that's what the quarterly chart looks like. It shows that this level could be sustainable, and gold is now at some new highs that it has not seen, and God knows how long. It has not been up to these levels. So is this a new longer term trend high? It could be. Okay, nothing's guaranteed, but it could be. But because of the overall momentum, 2 quarters in a row, gold wants to go higher. That makes me a believer to start looking at some gold stocks. So, for possible breakout and continuation higher. How high? We have to wait and see. But we could see gold break above the 2,200 level and hold it and continue higher. You know, for who knows how long, but we have to wait and see. Looking for pivot points in the future to see what gold pivots and reverse back to levels of support. Right now, gold showing strong momentum high, 2 quarters in a row, strong momentum high after bouncing off of a new level of support at that 10 to 10 per moving average. Looks like the moving average is starting to move higher, longer term. Let's switch to a monthly chart. And you'll see monthly chart showing nice momentum high. You see the 10 per moving average starting to go higher here. 50 per moving average is just below that. So all the moving averages are in sync. Looks like we want to try and go higher. Breaking it down, looking at a weekly chart, we are. Let me look at a weekly chart that has my RSI because I like to look at RSI as well. Here's a weekly chart. See that big break at around 22.25, then we pull back. Where to? Right to a level of support, right around 21, between 2150, I think between 2150 2170. Hovering around this 50 per moving average, and looks like we are starting to go higher again. So that could have been a nice place to place an order, some type of gold position before you move back higher, because it looks like it found support. This is on a 4-hour chart. Let me switch to a daily chart. Okay. So here's the daily chart. So gold broke above this level and looks like it's using it as a level of support. So could we hold the support level? We could, and we could pull back, but I'm a believer that gold is found some new life. So I think it can find a way to hold this level. So that leads me to believe that some of gold stocks are going to follow this overall trend higher. And the same with silver. And if we was to dip in a big way below 2140 and start going back towards 2100, okay, then that would I wouldn't be that would give me a reason to be cautious. I do think there's another level of support right down here around 2080. But that would give me reason to be cautious in the positions that I'm in, maybe prepared to hold off adding to those positions, maybe not get out totally, but maybe hold off adding to those positions until we get back above the breakout point, above that 2150 level. But needless to say, we're not below that 2150 level just yet, so we're still above 2150, which is right around here. So I think as long as we stay above 2150, we can see gold continue to go higher. So the overall trend in gold seems to me being a nice new uptrend. That gives me more confidence to you know, to play around and open a longer term position in some type of gold position that has been struggling, that has not been you know, as strong as overall on gold futures itself. So now, while I'm on that picture, we're gonna take a quick look at silver before I show you gold position that I'm currently in. Silver, again, I think the ultimate breakout of silver is going to be above 26. To get above 26, we can see silver really take a big push. But look at what's happening now. Look at these these past 2 days. So it was like right at a level of support. So either silver's going to break down and come back down below this 2450 level, or it's going to hold support and go higher. So I think the overall strength in gold and silver is in favor of the bulls in general. Here's a monthly chart of of silver. Silver is the one that I think has a lot more potential because it's still in its trading range. So silver's still in a pretty much trading range. You see how it's been a lot of back and forth. Hasn't really broken out. Well, this is a monthly chart too, by the way. Hasn't really broken out with some consistency to the upside to break out above this upper range, around 26. We get above 26 with a couple confirmation month, or at least another confirmation month, 2 months in a row, and a higher breakout above this trend, above this level, around 26.50. That could be a strong confirmation. But I like to get in a little early. I always get in a little early and just test the waters for that possible continuation. So that's a look at silver on this monthly chart. Look at the silver's weekly chart. As you can see, right up around the level of support. Look at the moving averages. You got this blue line, which is my 20 per moving average. It's starting to cross above the 50 and the 200. That's also positive for the bulls. So there's a lot of things that are positive that makes me believe that I can sit in this position. You know, it may take time to play out, so I get a longer term position. You know, longer term out of the money positions, which is not as expensive as the at the money position. Long term out of the money position, and if I'm right, continues to move higher, good. If I'm not, I'm not risking a lot of capital in order to get into those long term out of money positions. All right. So that is a general thesis of what I'm looking for. I'm looking for a trend that seems to be developing, and possible trend that seems to be developing long term, and that can possibly hold those levels. All right. Now, and let's take a look at crude while we add it too, because crude also shows good potential. Good potential. Here's crude. It's a weekly chart of crude. Crude developed support after a strong pullback from this level down to this level. See this consolidation pattern here, and then a nice little solid bounce off of the 200-day moving average, and crude is starting to move higher. Crude is right now at 82. We see crude get a big push above 82, get to 85. Then I think the next move we can see crude get to 90. So crude is also one that I see some strong momentum to the upside in. This is weekly chart. So crude also is another sector that I took a peek at to see if there's any positions within crude that interest me. The monthly chart of crude, if you look at the monthly chart of crude, you'll see how we are still at the bottom, but 3 months in a row, 1, 2, 3, that's strong enough confirmation for me. 3 months in a row of green months in a row, that leads me to believe that this momentum could continue higher. So I definitely wanted to be in a position of crude. Let's go back to gold one more time on a monthly chart, because I don't think I highlighted this enough. Okay. So gold, we see we got that bounce here off of this 50-day moving average. 20 per moving average, I'm sorry. And look at the moving averages. They are going up along with price. So that's also another positive on the longer term charts. The moving average is going up along with price. That's a good sign on the longer term charts. Okay, so that's always a good sign. We got the moving averages going up as well as price action. Now, some positions or recent positions that I entered was Newmont Mining. Newmont Mining is one of the gold miners, and it's been in a steady downtrend for quite a bit. I do believe if gold continues to be strong, I do believe Newmont has a potential to finally start to break out to the upside. Here's a weekly chart, as you can see, Newmont was as high as $86 at one point back in 2022. Since then, it's been in a steady downtrend. With gold starting to go up, I think Newmont has a chance to start to go up. Okay, here is the monthly chart, which really has my attention in a major way, because it is definitely in oversold territory with gold starting to go up. Here's a quarterly chart. Look how oversold gold is. Newmont is. So I'm willing to take a risk with not out of money to position, because this won't be that expensive. And if I was to draw a trend line here where we settled at before, see how price action got as low down here on Newmont back in 2015, and then it started to rise, came back down, and look what it started to rest at, right below its 50 this 20 per movement average. Use it as a, this is a quarterly chart. Use it as a level of support. So right around this level, if I wanted to draw a trend line, I could easily draw a trend line to capture some of these, to capture this area here where it seemed as though it was a level of support. Extend it out a little bit. So if we was to look back in time, it looks like this trend line here has been a strong level of support. You see it here in 2018. You see where we broke below it here. So, and where you should be resistance, and it battled with it a couple of times. So this strong line is either a strong level of support or strong level of resistance. With strong level of resistance here, broke back above it, so then it comes a strong level of support here. Look back in 2003. Look at where we rested at right there. Hit that level multiple times on the way down and bounced from it. So this level, and hit that level down here in 2008 and bounced right back up. So this trend line lets me believe that this is a strong trend line to either get a bounce from or break down. So what do we have now? Look at what's happening with Newmont now, with gold on the way up. Came down, hit this level, hit it. So we hit the level before. Now the question is, look at this wick. Bounce price right back up. So is this an area that we get the bounce on a quarterly chart? It's a possibility. And looked at, I took a look at the options market, and it shows a lot of interest on the call side. So that leads me to believe that we could start to see a push up in Newmont right around this $34 level. So what did I do? Jumped in a longer term position because it could take time to play out. So let's move it to a monthly chart. Monthly chart here also has piqued my interest now because we saw oversold conditions where we hit the oversold territory back in July of 2022. We hit it again here in 2024. RSI was oversold. Look at TTM squeeze, starting to see these yellow bars starting to form. Look at the volume. Volume starting to pick up as price was going down and just starting to turn green. So with TTM squeeze starting to show some momentum about to switch from bearish to bullish, are we about to see a move up in Newmont? That's a possibility. I don't want to be on the outside looking in. I think the better case scenario, or I say that the stronger case right now for Newmont is a move off of this level and not below it. So I'm willing to take that chance with an out of money position. Looking at where prices have been at before in the past, who knows? Could it make it back up to 86 over the next year? That's a possibility. So what I did with Newmont, now that I know that the gold price is starting to show some movement to the upside, I started off, and normally what I would do if I see the overall trend is starting to reverse to the upside or whatever it is, the downside, but upside, I'll start off with a small out of money position. And then if it continues to go in that fashion, I may add to that position with a longer dated call or vertical position. So with this one, my guesstimate is that, since we're in a possible uptrend, if we get a strong bounce from here, it would be nothing for Newmont to get back up, right back up to this 200-day moving average, which would take Newmont at least back up to $42. So what did I do? Jumped in with a longer term out of money position, not at 42, but at 37. I want to say 37.50, but it's just a straight call option that expires in about 3 months. 3 months. Doesn't expire to June. So I got to June to see a nice movement up in Newmont in order to see a sizable profit. If we get up above 40, then I would be, setting pretty well with the sizable profit. Okay. 37.50, the position that I decided to jump in. And I got in that position, I want to say, and it just spent about $1.25 per contract, so $125 per contract. And this is a fairly new position. I opened this one up on the 22nd. So the 22nd of March. So just a couple days ago, opened that position. I got until June to be right. And if it doesn't go in my favor, I'm only risking $122. Okay. And that's what I like to do when I'm looking for trend following. Now, let's take a look at a position that I've been in for a little bit now. And it's a longer term position. It's a spread on Occidental, which is in the oils commodity sector. Occidental is one that I jumped in against. I've been following crude for a minute. If crude starts to do well, I think Oxy has a potential to break out in a pretty significant way. So for Occidental, if we look at this, let's switch first of all to a quarterly on Occidental. Occidental got down as low as $10 back in 2020. Since then, it started to make a move higher. Had a major breakout back in 2022. So it went from $10 up to about $50 in about a year and a half or 2 years. And then what did they do when it got above this $50? It started to consolidate. Did not go lower, it just started to consolidate. Started to consolidate, creating what looks to be a bull flag. So for several quarters in a row, it's just been pretty much consolidating. Okay. That leads me to believe it's consolidating, waiting for the next big catapult move higher. So that makes me and again, you saw I showed you crude, how crude is in the process of a continuation higher. So that leads me to believe that Oxy will also do the same. Now, what drew my attention to Oxy is that it is a position that I've been noticing that Warren Buffett has been accumulating. If you look it up, you'll see Warren Buffett has been accumulating shares in Oxy on a regular basis over the past few years. That also gave me more confidence that he sees something that I don't know about. So follow the smart money. All right, now let's start to break it down. Look at the here and now. Here's the monthly chart. You can see, again, you see that big push up, and then we see price action pretty much found support level, the bottom of this triangle that I was able to figure out, and overhead resistance at this upper part of this triangle. Looks like we're just starting to break out of this triangle pattern. Look at the weekly chart, finally broke out of it. So now the upper part of this triangle will become a level of support. Looks like this pattern with this breakout above this triangle leads me to lead. We can start to see Oxy continue to go higher. Now, since I've been studying and watching particular crude oil for a minute, this is a position that I have. I put this one on, I want to say, and it was a call spread, so I can risk less capital to take advantage of the move. So I put the position on, I want to say it was February 22nd. So I've already been in this for about a month. So right around February 22nd, let's see. So right around here, let's look at the daily chart. So this is already profitable, and if I wanted to, I can take profits, but I have a lot more time to expiration for the position I put in. So right around here is when I entered this position. Okay, when I already saw the consolidation and already saw that crude was consolidating, ready for a possible move higher. Already saw that there was a bull flag that appeared on the longer term chart. So Oxy, and it was only a matter of time before Oxy started to either break down or go higher. So I took a risk that it was going to go higher. Gave myself time, ended up buying a call spread to risk less. So back here, it was Oxy was right around. What was Oxy at? Well, Oxy was right around $60. So I gave myself until June again, bought a 62.5 call, and I ended up selling the 70 call. And what made me sell the 70 is that it was an area that interesting because of previous prices in the stock and how fast Oxy can move. Let me get rid of this for a second here. Let me pick up a weekly chart again and see if I can pinpoint these levels. So I said if Oxy breaks out of this triangle, it wouldn't be impossible for it to see 70. Because we look over here to the left, this area here, right around this $70 level, right around here. That was a, oh, I need a trend line. So right around here, this is a level that we see that Oxy has battled with before. So we see it right around, it's just below 70, so around 67, 68. We see it battle this level here as a level of resistance and pull back. We see over here where it challenged it a couple times. Level of resistance here, level of resistance here, break out above it in a major way, pull back right below it, then break out above it here, challenge to here, and then pull back. So that leads me to believe that it could possibly break back above that $70 level in a major way. So that was the target. That's my target to the upside. The bigger target to the upside was 70. So it allowed me to get into that position and say anywhere between 62.50 and 70 is a place that I can take profit for a sizable gain. So needless to say, I am still in that position now. Bring it back down to a daily chart. Still in that position now. It is profitable. Could I take profits now? I could, but I still think that there's much more room to the upside with Oxy just getting this breakout. Man, it could pull back, and if it does pull back to around 62, that would give me a level or an area where I can add to that position with a longer dated contract beyond June. So that is just a quick overview of my trend trading strategies and a couple positions that I'm currently in. Yes, I do hold position in Oxy with the call spread. I do hold position in Newmont Mining, which is a new position, and it is not profitable yet, but I still have a lot more time with the 37.5 call option and a few other positions. I am another one that I saw some unusual option activity in a little while ago was CVE. It's also energy position. It is now overbought in a big way. It's overbought on the daily chart. So could it have some pullback here? It could. But this is another position that I jumped in a little while ago. Due to some unusual call option activity that I spotted. Got into this around March the 13th. Was March 13th? Yeah. On March the 13th. Right around here somewhere. And since then, we got a nice pop above this 200-day moving average. And that was also profitable. Another, and oh, two more I'm gonna show you guys. Silver. So silver again, I told you I've been a silver bull for a minute. So silver, I'm in a call spread in that one. That is a longer term call spread, doesn't expire until September the 20th. Silver, do you think silver has a potential for a major breakout? So into that silver position on March the 1st. So right around here. Right around here. Right around here, and we got to break out above the level. So now it is profitable. I could take profit on that if I wanted to, or I could wait till pull back to add to the position, which is what I'd rather do. Doesn't expire to September, so I got plenty of time to see a longer term push to the upside on this SLV position. And SLV position that I did get in was ended up back here. So I bought the 22 call and I sold the 27 call, believing that we could see potential move back up towards 27 if we get that break above that 26 that I've been. Yep. So 25 is a level of the SLV ETF that it seems that right around here, right around just below 25 is a level that is seeing some resistance at. So with this big strong push now, it probably won't take much for a good push above this 25 and head back towards some of these levels that we've seen before, which is 27.80. All right, so that gave me a higher target of 27 and a breakout point of around 22, and we are above that 22 level now. One more we'll take a look at is another one is copper. So copper is also displaying signs of a potential breakout. It too is now resting right at a level of support on a monthly chart, right around this 50-period moving average. And if I was to look at it weekly, you'll see how it got a nice move off of this 200-day, and it's starting to pull back towards 200-day. But I think anywhere around here is a good place for a longer term position. So FCX is a good way to play this position. And that's one that I bought a little while ago. It's a short-term position, and I'll probably be taking profits on that soon and branching out to a longer-term position. March the 15th is when I bought that one, and it's just a little short mini call spread. Bought the 45, sold the 47s on FCX, and if we look up the FCX itself, nice big push to the upside here. The monthly chart of FCX to see that big push off its 20-period moving average and a break above this upper trend line, which is what I established a little while ago. So could we continue to see another month up well above this level? That's a possibility. That's what I'm banking on. And this position expires in April. So I got a couple more weeks for this to be extremely profitable now. So I could close the position out now. But what I think I'm going to do is hold on to this for at least another couple of weeks and possibly get another position that expires later on in the year. All right, so that is a quick synopsis on trend trading and what I like to look for and the setups I like to see before I enter position. All right, hopefully this is something that you guys can use, and catch you guys in the next video.